Thursday, May 6, 2021, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at why the U.S. Treasury could actually default this summer. And yes, Alan Greenspan said a few years ago, and I'll play the clip here, that the United States can pay any debt because it has the printing press. It can always print to do so. But we're going to look through a story as well today. It's come out on Associated Press or AP. The last time the U.S. Treasury faced this kind of crisis, a debt ceiling crisis, was in 2011. And there were some reverberations in the markets. And we'll look at that. So let's quickly listen to what Alan Greenspan said here a few years ago.
Are U.S. Treasury bonds still safe to invest in?
Very much so. I think this is not an issue of credit rating. The United States can pay any debt it has because we can always print money to do that. So there is zero probability of default.
So there you go, zero probability of default. So why am I saying that the Treasury could default this summer? Well, because of the debt ceiling is approaching again. The debt ceiling is basically a credit card limit to the U.S. Treasury credit card, so to speak. And every few years, there's a debate in Congress on whether to raise the debt ceiling. Eventually, politicians, after a lot of discussion, do raise the debt ceiling. They keep kicking the can out down the road. But in the last 10, 12 years, it's been harder and harder. We've had more and more brinksmanship. Yes, Alan Greenspan is right that the Treasury can always print. You can always print the money. But if the politicians in Congress cannot come to an agreement, you still have a lot of debt that matures, and you have a lot of debt that needs to be rolled over. And the only way the Treasury can do that is by borrowing even more. And we all know that the debt is getting out of control. So we're going to look at the last time there was a major problem with the debt ceiling. We even saw that Standard & Poor's back then in 2011 downgraded the U.S. debt, U.S. Treasury, from AAA to AA. And as you can see here, the head of S&P had to resign right after that. And it says, a ratings firm says Sharma exit for year end in works before U.S. downgrade. I think the Wall Street Journal was trying to make it look like there wasn't anything to do with that. But I think it was very significant that he had to step down, Mr. Sharma. So I think that gave a signal to other rating agencies, the major ones like Moody's and Fitch, not to mess with the U.S. Credit rating. The other thing it does, as I said, investors lose confidence if they can't solve this problem fairly quickly. Not just domestic investors, but especially foreign investors. And I think politicians a lot of times don't have a clue how important these things are to the financial monetary system. They don't realize that the monetary system, unfortunately, is backed by this endless debt and endless treasuries. And what do I think? Would it be a good thing if everything imploded? This Ponzi scheme, really, that is the national debt, not only in the U.S., but everywhere around the world. Of course I would. It would be a huge event, of course. It would create a huge, not only financial and economic crisis, but humanitarian. So I do admit that it wouldn't be good in the aftermath of such a crisis. I actually think this philosophy of lumbering future generations with debt is morally wrong. And just like Thomas Jefferson said, he was against that. And so was Andrew Jackson, who was very anti-central bank. Andrew Jackson, of course, was the last president to pay off the national debt in the 1830s. Unfortunately, it didn't last that long. How did he pay that off? I think it was a lot to do with the sales of federal land in the West, and that's how he managed to do that. I think it's an asinine philosophy to think that a national debt makes a country prosperous. The only people that it makes prosperous is the political class and the banking class, because the bankers will always make money when there's a lot of debt, because don't forget, the Treasury has to borrow that money in the market, and it has to go through the primary dealers, who are the bankers, and they make a fee. So yes, the debt ceiling crisis in 2011 happened around the middle of the year, pretty much where we're now, from April to August, September. It is on Wikipedia. You can have a look at that, have a read. I'm not going to go through it, but just wanted to show you what happened to gold back then. If you look here, 2011, and the debt ceiling question was already coming up even before it became headline news. So you can see that gold went all the way from around 1,300 at the end of January 2011 to above 1,900 by the beginning of September. So it did impact the dollar, because gold going up is the mirror image of the dollar, of course. And if we look at the dollar as measured to other major fiat currencies, you can see as well that dollar didn't do very well. It dropped all the way from just above 80 at the beginning of 2011 down to almost the previous low in 2008 at just below 70. It dropped to around 72.64. So that was when gold topped there in 2011. So it didn't help the dollar at all. And yes, foreign investors, domestic investors don't like the uncertainty. So let's go through the article that came out late yesterday on AP. And I would say as well, you would think that right now, with Congress and the White House being controlled by the same party, it would be easier to get this through. But I think there is some question here as to whether it will be smooth sailing. So let's go through this article. Treasury warns of need to deal with national debt limit. That's the debt ceiling. So the Treasury Department says it will employ measures to avoid an unprecedented default. There you go, Alan Greenspan, on the national debt this summer. But officials say those measures could be exhausted much more quickly than normal, given the unusual circumstances of the global pandemic. Well, you can always blame something else aside from yourself, aside from decades of rampant spending, deficit spending, not only a budget deficit, but trade deficit, all kinds of deficit, right? We, of course, as individuals, can't do that. Treasury officials on Wednesday urged Congress to pass either a new borrowing limit or another suspension of the debt before a July 31st deadline. The Treasury will continue to initiate the types of bookkeeping maneuvers. I guess if we tried that, or a corporation or a small company tried that, we'd probably be in jail, because it's probably all illegal, or it's probably not... doesn't correspond to accounting principles, right? It has used in the past to keep the government from breaching a level that would trigger a default on the massive national debt. In light of the substantial COVID-related uncertainty about receipts and outlays in the coming month, I thought the economy was doing really great. Janet Yellen just said that the economy could be overheating. I don't understand what the problem is, right? Well, it's because the economy isn't doing great. It's all based on more and more borrowing and deficit spending. It is very difficult to predict how long extraordinary measures might last, said Brian Smith, Treasury's Deputy Assistant Secretary for Federal Finance, said in a prepared statement. The government has been able to borrow enormous sums of money to finance trillions of dollars of support during the pandemic because the limit on borrowing has been suspended. But after July 31st, the limit will return to whatever debt level exists at the time. So yeah, this was under the previous administration. They suspended the limit, so you could just keep borrowing as much as you wanted. I have a feeling this is going to happen again. They're just going to suspend the limit again. That means more red ink, more red ink. So it says the national debt subject to the limit now stands at a record $28.1 trillion. That amount covers debt the government owes to itself in the form of commitments to Social Security and other government trust funds. The amount of debt that is held by the public currently totals $22.1 trillion, an amount slightly higher than 100% of the entire economy, and heights not seen since the huge borrowing the government did in the 1940s to finance World War II. Borrowing has soared in recent years to finance, there you go, huge budget deficits. That reflected increased spending on domestic and military programs in budget deals then President Donald Trump reached with Congress, and also to cover the cost of Trump's $1.5 trillion tax cuts approved by Congress in December 2017. So there you go. It doesn't matter what party is in power, guys. You need to start realizing that, politics is just theater. And yes, I know what's going on in terms of the former president and Facebook and all those things. But I think that actually lights the fire even more in the divide and conquer. That's all I have to say about that. Over the past year, the higher deficits have reflected the trillions of dollars the government has spent to provide support during the pandemic-triggered recession. I would say as well, even before the pandemic, the U.S. Treasury was running 5% of GDP budget deficits. That's under the former president. So that's why the economy was looking good, only because you had a lot of deficit spending. It might have been a little bit organic, but without those deficits, the economy would have probably been growing at zero or even shrinking, because don't forget, we never got above 3% GDP growth during the previous administration, nor during the Obama administration. In the latest package, President Joe Biden got Congress to approve $1.9 trillion in March and to provide 1,400 payments to individuals and other types of support for individuals and small businesses. Treasury officials did not specify what measures it will employ if Congress has not acted by July 31st deadline to either raise the borrowing limit or simply suspend the limit for a period of time. So suspending the limit would basically mean you'd have no credit card limit. So it's like Visa calling you and say, Mr. Ineco, your 2,000 pound limit has been lifted. You can spend as much as you want. By the way, I don't have a 2,000 pound limit. I do have a credit card, but I rarely ever use it. I only keep it because sometimes to book things, it helps to have the credit card because of insurance. What Treasury essentially uses bookkeeping maneuvers to avoid a debt default. They basically entail withdrawing money invested in government accounts, such as the fund that covers government pensions. The money is always replaced with any lost interest once the debt limit standoff is resolved. So where does that money come from? Well, it comes from out of thin air. It comes from the Fed helping with QE. It comes in the form of inflation for future generations. It comes in the form of higher taxes for future generations. Just the strategy that the founding fathers warned against. Congress has never failed to deal with the debt limit by the deadline, although in 2011, the standoff between Republicans and the Obama administration was so prolonged that Standard & Poor's, the credit rating agency, downgraded a portion of the country's AAA credit rating for the first time in history. And the CEO got the sack, right? I think what happened was the Justice Department sued Standard & Poor's, not for the downgrade, but for another matter. Treasury made the announcement on the debt limit as part of its quarterly announcement of what types of debt it will issue this quarter to cover the government's financing needs. Treasury said it expects to borrow $463 billion in the current April to June quarter, which will be part of its plan to borrow $2.28 trillion for the full budget year, which ends September 30th. I will be a buyer of $2.28 trillion. I bet it was going to end up being a lot more. The $463 billion represents a significant jump from the government's initial estimate 3 months ago that it would need to borrow just $95 billion in the current quarter. There you go. The change was attributed to passage of the most recent virus relief bill of $1.9 trillion in March. The government ran up a record $3.1 trillion budget deficit last year, reflecting the COVID relief spending and the drop in revenues caused by the recession. Private economists believe the deficit for the current budget year will be even higher, possibly hitting $3.3 trillion. So what do I think will happen next? Well, I think it will resolve itself. There might be some kind of standoff like in 2011, even though the chance of that is slimmer because the Blue Party controls the White House and the two houses of Congress. But you never know. And if it drags on for too long, it might give investors food for thought. It might make investors lose a bit of faith and confidence in the whole process. And as you saw back in 2011, there was a big problem. So yeah, I don't think the U.S. Treasury will default. It might not bode well for the dollar versus other fiat currencies. And it could bode well for precious metals, of course, because back in 2011, we saw that gold rallied about $800 from the beginning of the whole crisis to the end. So with that, let's quickly look at where the markets are this morning. So it's 8:21 a.m. London time. So we've got spot gold again testing that 1800 level. We're at 1793.50, up just over $7. The high has been 1796 and the low 1781 overnight. Silver is up 27 cents or 1% at 26.73. High has been 26.82, the low 26.16. The Dow futures up 70 points. NASDAQ is up 54. The S&P futures up about 10 points. We saw yesterday that the NASDAQ dipped on the close. I think there was a headline about the administration maybe suspending, I think, patents for the major pharmaceutical companies during a crisis. So that didn't help those pharmaceutical stocks, maybe even technology stocks. Anyway, currencies, we got the pound unchanged at 139.08. The euro is back above 120 at 120.24, up 0.2%. The dollar is unchanged virtually versus the yen, 109.30. And the dollar is down back below 648 versus the yuan. We're at 647.60. Crude oil, still fairly firm. We got up above 66 yesterday. Right now, it's up overnight, but back below 66. It's at 65.66. That's WTI crude. It's up about 1/8%. High-grade copper, a stone throws away from the all-time high around 462. We're up 0.2% at 455. And to finish off, the 10-year yield, we're at 158. So we've come off about 3 basis points since yesterday. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.